Welcome back to the channel. Today, we're diving into one of the wildest days on Wall Street. We're talking about a 700-point plunge, a miraculous comeback, and what this all means for you as an investor. If you're into financial analysis, market trends, and breaking news updates, make sure to hit that like button and subscribe to stay informed. Hey everyone, welcome to today's video. Let's break down what happened on Wall Street and why the market saw such a wild ride yesterday. Wednesday was a day full of tension for investors. All eyes were on the Consumer Price Index report, which was expected to give some insight into inflation and whether the Federal Reserve would cut interest rates by 0.5 point at their next meeting. The CPI report brought both relief and frustration to traders. The annual pace of price increases cooled to 2.5%, the lowest level since February 2021. But the hope for a 0.5 point rate cut? Yeah, that's pretty much gone. Let's take a closer look at how it all went down. Around 2 hours after the CPI data dropped, the Dow tanked by 700 points. That's a whopping 1.7% loss. Investors were hit hard as they realized that a 0.5 point cut from the Fed was now highly unlikely. The S&P 500 and nasdaq composite followed the Dow, all dipping sharply. The initial market reaction had a lot of investors spooked. CNN's Fear and Greed Index, which gauges market sentiment, sank deeper into fear territory, adding to the negative vibes. But just when it seemed like things couldn't get worse, something remarkable happened. With about an hour left in the trading day, the markets bounced back in a big way. The Dow erased all those losses and ended the day up by 124 points. Yes, you heard that right, up. That's a 0.3% gain. The S&P 500 also turned things around, closing 1% higher, while the Nasdaq led the charge with a massive 2.2% gain. Now, you might be thinking, is this kind of roller coaster ride normal? Well, actually, yes. September has a reputation for being a volatile month for the markets. Large swings aren't unusual this time of year, and Wednesday's ups and downs were just another example of that. Let's dive into the CPI report a little more. Overall, consumer prices rose 0.2% in August, which was the same as July's increase. But here's where things get tricky. Core inflation, which excludes food and energy prices, actually rose by 0.3%, higher than the expected 0.2%. Why does this matter? The Federal Reserve pays extra attention to core inflation because it offers a clearer picture of where prices are headed long-term. And with core inflation rising faster than expected, the Fed is likely to be more cautious about making any drastic interest rate cuts. So what's the deal with interest rates now? Before the CPI data was released, traders were betting on a 34% chance of a 0.5 point rate cut at the Fed's next meeting. After the report dropped, that chance plummeted to just 15%. Now, there's an 85% likelihood that the Fed will only cut rates by a 0.25 point in September. This more cautious approach is expected to continue into November's meeting as well. So, while lower rates are still possible, don't expect anything too drastic. On top of all this, there's also the political factor. After Tuesday night's debate, Vice President Kamala Harris's performance has sparked new conversations. Some are wondering how her economic policies might impact the market, especially her proposal to raise the corporate tax rate to 28%, up from the current 21%. Now, while that's still lower than the 35% she proposed during her 2020 campaign, it's enough to raise concerns about how businesses will react. Higher taxes could mean companies delay investments or cut back on hiring. And as always, investors are paying attention to these factors when planning their next moves. So, what a day on Wall Street, right? From a 700-point plunge to a full recovery, it just goes to show how unpredictable the market can be. What are your thoughts on the Fed's next move? Do you think we'll see a rate cut or not? Drop your predictions in the comments below. And don't forget to like and subscribe for more market updates and analysis. Thanks for watching, and I'll see you in the next one.